Good afternoon. My name is Jeanmonod, Regional VP of Sales here at Angel Oak Mortgage Solutions. I'm lucky enough we're going to do a deep product dive into our debt service coverage ratio. It's about 30% of our business, and it is just a really strong program. I'm going to introduce our newest panelist to join us on our webinar, Javi Naranjo. Javi, please say hello, please.
Hi, everyone. My name is Javi. New here. About a year I've been with Angel Oak, really dug into these guidelines. I become an expert myself, I think, on it. So I'm excited to be here and let you guys know what good programs we got for you.
Yeah, Javi, thanks for joining us. And you're definitely on this panel because of your knowledge on the debt service coverage ratio. So, and then a tried and true blue partner of ours here, Carlos Bettencourt, who I get to work with every day. So Carlos, please say hello.
Hello, everybody. Good morning, good afternoon, depending on where you are. I'm Carlos from here at Angel Oak. I'm at the Miami office today here with the team, and been with Angel Oak now 8 years, I think. 8 years, yeah. 8 years. And very excited to bring you guys some little more information on this, one of our top programs that we get a lot of questions on. So we're hoping we can provide you guys with a lot of cool tips on how to generate more deals.
Yeah, so I'm glad you brought that up, Carlos. So today we're gonna do a deep dive into this program. We're gonna talk about how the loan application needs to look, what the credit report needs to look. We're gonna cover the highlights of the program. We're gonna show you some great tools we have, our quick quote tool, and then we're gonna cover our marketing portal for how you can either grow your business using non-QM. So, but before we jump in here, we're gonna launch a poll. And the question we're gonna ask everyone, we'd love for you to participate in, is who has originated and closed a debt service coverage ratio in the last 12 months? So it'll take a couple minutes to get your participation here. And then, if we've done this, we've been doing this now over 2 years. We started these, deep dive product webinars to help you guys grow your business. And it's 2 years ago this month is when we started this webinar series. So, and just as all right, so the results are in. 72% have not originated a debt service coverage ratio program in the last 12 months. So huge opportunity. That's why we got huge numbers on this call. And that's why, Javi and Carlos are going to take you through. And we're going to get started. But before we go over the highlights of the program, Carlos, talk to us what helps you, what are you looking for, the most important parts on a loan application?
I think most importantly on these deals, John, and I always tell my brokers, is that we need to know the story, right? Every deal is different. Obviously, that's cliche-ish. Every scenario is different, whether it's a refinance or a purchase. So we always like to start with a very, very thorough conversation and understanding of the deal that we're looking at. I know a lot of brokers just are getting the information as it comes, and we want to help you with that. You're not going to know every question to ask, so we encourage you, especially if we have this local representation access, obviously to Javi, to you, John, to myself and others, to reach out to us, to have that conversation about your scenario, your customer, so we can understand it from top to bottom, right? Holistically, not just I got 700 score and he or she wants to buy a property. Let's find out a little bit more. How many properties do they own? How's credit? Are they a first-time investor? Are they a homeowner? Where do they want to buy? Are they moving? So we want to review the entire deal holistically before we jump right into send me a 1003 in credit and let's look at a file first. So for me and for us, I would always recommend starting off with a great deep conversation on the deal. Helps us all.
Yeah. So Javi, talk to us a little bit about, and I've already got some questions coming in. So let me just level set here. This is being recorded. If we don't get to your questions today, we allocated an hour here. We know your time's important. So if we don't get to answer all your questions here today, we will definitely have your account executive reach out. Javi, tell us what we're looking for on credit. Tell us, let's talk about trade lines. We want everyone on this call today to be just as smart and educated on this debt service coverage as you and Carlos are. So give us what we want to see on credit.
So yeah, Carlos said it best. I mean, we want to know the story, and I think the credit report tells a big chunk of that story. You know, when we look at the credit report, we're looking for 2 years of 24 months for trade lines. We need at least 2 years, and then we need 3 trade lines, of 12 months, or 2 trade lines of 24 months. Sorry. So, you know, we're really looking to see their story through their credit report. For consumer lates, no lates for 24 months. And for mortgages, we're looking for 1 late in the most recent year, if they're perfectly fine for months 13 through 24. And then no lates for the most recent year. We allow that, and we allow 2 lates for months 13 through 24 on that.
Yeah, great. And one of the things, you know, Carlos talks about, and Javi always talks about, 30% of the loans we close here at Angel Oak don't meet our guidelines. So, you know, the better that 1003 loan application can look, and obviously, you know, any explanations for hiccups on credit is always welcomed up front. And that's why, you know, working closely with your account executives, that's how, you know, we get those exceptions done. So Carlos, let's jump into this.
Let me just jump in something real quick that Javi said, which is a great point that he brought up. And we get this asked a lot. We get a lot of customers that get these loans turned down because they've had a mortgage late. You know, and I want everybody to understand how important it is that we do allow, you know, mortgage lates within the last year. So it's kind of, a lot of people are shocked by that, right? And I think it's something that, like I said, it begins with a good conversation to understand, you know, what happened. You know, life happens, right? You missed a payment, you were late, you were doing this, or did something happen with a check, or the auto debit didn't go through. Life happens, right? So we're here to understand that. We do a lot of our loans that have, like you said, exceptions. So we're not just like looking at a credit report and saying, there's a late payment, forget it. We're not running DU or LPA and say, well, if there's the findings say declined or ineligible and you have no loan. So that's a big, I think, benefit working with Angel Oak. And of course, you know, Javi and the team, that they can read that credit report and say, you had an issue, can we get something to explain what happened? And if it makes sense, hey, we have a deal. So again, I want everyone to understand that a lot of lenders will just look at a credit report, gloss over and say, no, we'll actually jump into that credit report and look at it and help you get that deal done. So I want to bring that up. Yeah.
Great. So Carlos, just kind of give us point out some bullet points that we have up here on the screen for highlights of the DSCR program, and then we're going to jump into the Q&A of this. So.
Yeah. So bullet points. I'll tell you the most popular ones that we always come in with, that we're able to save a lot of deals is, can you do loans under 100,000? Can you do loans at 75,000? Right? Our minimum 75, 78, 100, 105. You know, I got multiple deals that are small condos or small units. Yes, the answer is yes. Obviously, everybody wants the big loans, right? But a deal is a deal, and we want to help you, and we want to help your referral partner, your realtor, who doesn't care. They just want to get the deal done, and so do we. We want to help you with that. So 75,000 is the minimum. How does the program work, right? Well, it's strictly based on cash flow. The bottom line is, I know I hear a lot of, you know, funky terms and monikers out in the street, like, well, it's this and that and the other. It's as simple as saying, does the rental income from that property cover my mortgage payment? That's it. That's all we want. We want, as the investor, to at least confirm that that property that you have a $1,500 payment on that mortgage, that hopefully it's going to rent for at least 15 and over. So that's really the way the entire program works. Okay. One other huge benefit of this program is that with a 700 score and a 75% LTV, we are able to waive the DSCR requirement. So I just said, I want the rent to cover the mortgage, but what about if it doesn't? So for those of you that are local, or, you know, ever done a deal in Florida Keys, for example, that's my #1 market for these non-DSCR issues. They're buying a property that is on an Airbnb type of property, right? Short-term rental through the roof. But if we look at the stable market rental, 6 months to a year, well, it's a lot less. So sometimes you're doing a $2 million loan for a property that the rent only coming in at $7,000, $8,000. The mortgage payment is 14 or 15 or 13. Well, you're upside down 100%. So that's a big difference. That's a big deal. But we know that this property is going to be on Airbnb. We know that cash flow is fantastic. And we're able to, with those two requirements, right, 700 score and a 75% LTV, we are able to sidestep that requirement and still get that deal done. Okay, that's a huge benefit, that you have that ability for those big income producing properties. All right. Additionally, there I just mentioned we could do Airbnbs and VRBOs. That's not acceptable. The program does not require income or employment to be listed. Okay, very important. No income, no employment. You don't have to say they're investors or they're this or that, self-employed. Nothing. We're not looking or asking any of that. That 1003 is going to be absent of all that information. Okay. Additionally, they can close in an LLC. We get those all the time. My customer wants to close in an LLC, doesn't want to close under their personal name. That's obviously a big benefit to the program. You must own your primary residence, guys. That's very important. Obviously, we want to make sure that the customer is not buying this as a primary. You got to be careful with that, because that customer who moves into that property, we have an issue with occupancy. So we want to make sure that at least it makes sense that the customer is truly buying this as an investment property. You can do purchase, refinance. We get a lot of these properties that are free and clear that the customer wants to cash out to buy multiple other investment properties. Let's do it. Let's do it at the same time, actually. Okay. Right. Let's do a cash out on their duplex, for example, and let's close 3 more investment property purchases at the same time. So that one deal, that one cash out, nets you 3 or 4 other deals, and you're bringing those 3 other 4 deals to that realtor. You're giving them 3 commission checks. You're a rock star, because you are now putting money into that realtor's pocket, instead of what they say to us. Well, you're always asking for deals. Well, no, we're giving you deals now, and qualified customers that are ready to buy. Okay?
Yeah, Carlos, this is 1 second, Carlos. This is really, this is a multi-pack. A lot of times, this is a multi-pack transaction. So, no feedback there.
Yeah, I've been able to do. I've had 8 loans that I've done for customers, 9, 6, 8. And these customers, it's actually, and if you see there, I kind of skipped it. It says no limit on total properties. That's actually good. We like to see when customers own multiple properties, because they understand cash flow, right? Yep. They understand. I don't need to have a conversation with them how cash flow works and this and that and the other. They come to you like, Mr. Loan Officer, I got 6 properties, they're cash flowing. I want to do one of those Dscr loans. I mean, those are the easiest loans we'll ever do. Sophisticated buyers, they understand how the program works. Something that they know almost better than us. I've learned a lot of tips from my broker, who gets it from the borrower, who's on his 9th property. I'm like, oh wow, cool. I didn't know that you could do this and you could do that. So it is pretty cool. And that sophisticated buyer is going to have a very smooth transaction, because that sophisticated buyer understands cash flow, doesn't want to put paperwork, doesn't want to bring you a stack of tax returns this big, to maybe get $200 off on a mortgage payment a month. So that's the program for you.
Yeah, Carlos, you hit on a lot of great points there. Not having to bring tax returns. We're just qualifying off the subject property. We don't need reserves on any other properties listed there. So really great points. Let's get to some of these questions here. I'm getting a little feedback. I don't know.
And Johnny, and by the way, guys, non-warrantable condos are allowed in this program, okay? So across the board, before I forget, are allowed.
Great point. Carlos, is there a pricing adjustment for the no Dscr?
Yes, there is. So depending on the Dscr coverage, typically the pricing adjustment is half a point. Okay. So what we do is, once a deal is in house, we calculate what the Dscr payment is, and we have a couple of options. Either A, of course, lower the loan amount to match 1-to-1, or go ahead and waive the Dscr option by adding the half a point hit. I know obviously in this rate environment, everybody's like, whoa, wow, the rate's going to go up, rate's going to go down. Guys, if we break it down to the payment's only going to go up $210 a month, $300 more a month, Mr. Customer. But you got that property that you're going to cash flow fantastically for $200 a month. So you know what? Skip the lattes this month and go ahead and close on your month. So small adjustment.
That's the thing. We've learned a lot about. I don't know what's the feedback I'm getting here, but But a lot of your investors are pretty savvy investors, so they're not, they're not rate sensitive. And we have that saying I learned last week, other people know about it. It's you marry the house, you date the rate, right? So.
Yeah.
So Javi, talk a little bit about how many units. I mean, what do we go up to? A couple of people, Carlos touched on a duplex. Give us a breakdown, single family, talk about how many units we'll go up to.
Yeah, so we'll actually go all the way up to 4 units. I mean, it's 4 units. I've worked on a couple 4 units. Of course, if you're cashing out, they cannot be vacant. I think that's an important note. When you're refining these properties, we got to make sure they're not vacant. Usually I ask that ahead of time. I think an important note that Carlos has been talking about is that we're going to review these deals before you guys go into underwriting. I just want to touch up on that. I mean, me, Carlos, all of the AEs at Angel Oak, we're specialists at what we do for a reason. We don't want you guys to waste your time. Time is valuable, especially in this industry. So, yeah, we're going to look at these deals. But going back to the units, yeah, we go 1 to 4 units, single family. We do condos as well, as Carlos said, non-warrantable.
Yeah, so Javi, I want to stay with you here for a minute because you talked about on a cash out, can't be vacant. Talk about purchase. Fred is asking here, does the property have to be rented on a purchase?
On a purchase, no, it doesn't have to be rented. We could totally take it on. It's totally fine. Of course, we're expecting that our borrower is going to want to rent it out. So, yeah, we'll be looking for that.
Yeah. And so, Fred, hopefully that answers your question. Thank you, Javi. Carlos, I've got Ronnie asking here if they close in an LLC, but does it show up on their personal credit report?
Absolutely. So it does. So remember, credit, we do have to qualify the customer on their own terms, right? On their own qualifications. So we want to make sure the customer has funds. Can they use business funds? Yes. Their own credit? Absolutely. And then title, of course, can be taken under an LLC, but yes, it will show on your credit. And when you run Fraud Guard, for those of you that know Fraud Guard and Loan Safe, it will, because the customer has to personally guarantee it as well. Okay.
Yeah, and Gabrielle, it's not a silly question. It is that the debt service coverage ratio is only for an investment property, not a primary or a second home. Another question here, Javi, for you. Carlos talked about purchases. You've touched on cash out. We talk about rate and term. This is still a hot, all the prognosticators, oh my God, the sky's falling on real estate. It's still a hot market, right? Let's face it. So talk about delayed financing, Javi.
Oh, that's my favorite. I call it a combo deal. It's the number 5 on the menu. Yeah, so it's kind of a combo of the purchase and a cash out. So you guys, you have a borrower just bought a house cash. I mean, as John said, the market's hot. They'll buy the house cash to beat out all these other people that are bidding. But after they pay cash, I mean, their bank account's looking depleted and they want some money back. What we'll do is we'll give them that cash back, and we'll use purchase guidelines to go ahead and do that. We'll look at the lesser of the appraised value or the purchase price. And inside of those 6 months, if they use hard money, we do allow that too. If it's a combo of their own cash and hard money, we allow that. We also allow, depending on the program, for this program, we do not allow gifts, but just to kind of put in my little input on other programs, the ones that we do allow gifts, we allow gifts and their own funds as well.
Yeah. So, and then a question here, I'm going to do a shameless plug for our webinar next week. Salvador is asking, can we do a Dscr on an ITIN borrower? No, but we are going to cover ITIN next week, but you can, and we're covering foreign national next week. We do debt service coverage on foreign national. So Salvador, hopefully that answers your question. Let's take a couple other questions here. We talked about title and LLC. There is no limit. Carlos touched on that. Carlos, can this be done in a 1031 exchange?
Absolutely. I love it. Yeah, it's a great question. I just recently did one that the customer sold a gas station or something, and we did it with the funds on a 1031 exchange. Yeah. Absolutely, we get a lot of those. I have quite a few of them that come in, and those actually those are the good ones. Those are the big ones. You know, buying a big house in the Keys, or this or that. Properties in all over the state, Destin, Florida, waterfront property even by St. Augustine up there. Absolutely, great question.
Yeah, and Javi, you might have to look at your matrix here. Just what's the lowest score will we go down to in the LTV?
Yeah, it's going to be a 640 with an 80% LTV.
So there's always changing. That's why, staying in touch with your account executive, because things are always changing. He didn't even have to look at his matrix. I did, but Javi did not. So a couple other questions here. We touched a little bit on reserves, Carlos. How many months reserves do we require on this subject property?
Yeah, John, it's a good question. So all we require is 6 months reserves on the subject property. So any other subsequent property that the customer owns, we do not add any additional months of reserves for those. Additionally, if you're doing a cash out and you're a little thin on reserves, or maybe your customer, again, these are business people, they don't want to provide additional bank statements and additional documentation. So the proceeds of the cash out go to meet your 6 months cash out reserve requirement. Okay, so in theory, maybe our top brass doesn't want to hear this, but if you have an account that's not that cash rich for now, for whatever reason, right? Maybe guys, unplug this. But yeah, your cash out proceeds can go ahead and cover those reserves as well. So that's a big benefit, and we do save a lot of deals that way.
Yeah, and Javi, you and Carlos have both touched on cash out. What's the seasoning for a cash out to use appraised value?
6 months. So we kind of give you that nice little delayed financing. As soon as you're not eligible for delayed financing, you're eligible for cash out. We kind of give you that kind of on month 5, day 30, 31, you just switch right over to cash out, 6 months.
Yeah, so Sylvester, that was a great question. So Javi, thank you for asking that. We had another question here, Carlos. How do we determine the rent if it's a purchase? So talk to us how we get that Dscr and that ratio. Where do we get that information from?
Sure, great question. So we're going to order obviously the appraisal, depending on the type of property. There's obviously a 1004. What we'll do is we'll order the 1007, right? The rental comps. So once the appraiser gives us that report, we'll know what the estimated rental value is. So we're trying to hit that number or above, right? Or that number, I guess, or below on the mortgage payment. Now I do see that given the rising rate environment and the fact that and John, we travel, go to a lot of trade shows, and so we speak to a lot of appraisers and AMCs and panelists, and a lot of them tell us, in the Fort Lauderdale area, I know I cannot rent a home for less than $3,000, for example. But I'm an appraiser. I can only use what's on the MLS, right? So I get a lot of that feedback because we always ask, well, I know the market is at $3,000, for example, but what happens if everything on the MLS is at $2,500? Because a lot of those rental transactions are done privately. They're done by owner off the MLS. So I know it's a little bit of a pain point for appraisers that we know it's there, we just can't use it, unfortunately. And that does limit all of us in this market getting to those comps. So sometimes you say, man, if I have a $3,000 check here, there's no way I can rent any house in this neighborhood, right? But the comps only support 2,500. We have to go with 2,500, unfortunately, and then we'd have to make adjustments to the loan amount.
Yes, and again, this is being recorded, just so everyone knows. So if you do miss something that maybe was said earlier, we will send out this recording. And if we do miss your question, a lot of great questions coming through. Really, we will have your account executive reach out to you again as soon as possible. Obviously not primary residence. What's the, so I've got a couple other questions here. Javi, great question here. Is this program available for the first-time investor?
Yeah, for sure. Get that all the time, yeah. First-time investor, totally, all the time. Now, want to be clear and make sure I enunciate. First-time investor, not first-time home buyer. They can't be a first-time home buyer, but they can be a first-time investor. You know, especially now, a lot of people are looking to rent out. A lot of people want that passive income, so totally fine with that. Yeah.
Yeah, we had a question here, and Javi went over that. So the minimum credit score is a 640, just so everyone knows, and that's going to give you an 80% LTV. So there is no debt to income ratio here, right? We're just going off that subject matter expert. I mean, you guys are the subject matter expert. We're going off the rent comp analysis on the title rate. Javi, is there a prepayment penalty on this program?
Yes, there is. So we have a standard 3-year prepay that could be bought down or out. But you also have to check on your state. Of course, some states allow it, some states don't. But we do have a standard 3-year. If you want to buy it down, you could do that through rate or cost. If you want to buy it out completely, it's going to cost a point.
Right. So Carlos, we have a good question here. You know, we talk about the rent comp analysis on the appraisal. What if the place is leased out, right? Maybe they're doing a refi or doing a cash out. Could we use a lease agreement?
Yeah, great question. Gold star for that question. So, yeah, what about if you have it's a rate and term, right? Or it's a cash out, and you do have tenants there, and it's you know, you're getting $2,000 a month on a rental, and the appraiser comes back with, no, it's actually $1,500 per the market. Well, we do have, this is something that's very unique to Angel Oak, and I want to make sure that everybody understands that. Extremely unique to Angel Oak, which again lets us save a lot of deals. I think a lot of brokers say, oh my God, we were able to save a deal because of that fact, you know. So I think shame on us for not bringing that more to light, shedding the light on that specific detail. Yeah. But if you have a current lease on that property that you own, okay, and you're able to demonstrate 3 months, you got to give us 3 months of that rental receipt, the payment receipt. We can verify the payment, verify the lease. We will actually override the appraisal findings and use your actual rental income. So again, going back to that $2,000 example, you're getting $2,000. Customer, your tenant is paying you, you know, a check on a monthly basis with a check or a debit from the account, Venmo, Zelle, whatever they pay now. Yeah, and the appraiser says $1,800. Well, no, Mr. Underwriter, here's $2,000. Here's 3 months of proof I'm getting $2,000. We'll use your $2,000. So yeah, that's a huge benefit that came on me. I don't even talk about it that much.
It's a great point. And Bill and Salvador both had those same questions. So I think Salvador is going to try and become a really subject matter expert here because he's asking a lot of great questions. Got a question from the reserves. How long do they have to be sourced in season?
30 days.
You want to take that one? I'm sorry.
Yep. I think we answered it at the same time. 30 days.
Okay. We're going to get to pricing. I promise. A lot of people have talked about what are the rates on the debt service coverage ratio. We're going to show you a great tool that you do not need credentials to log into. And then I know we're a half hour. I still got a ton of questions coming in here. Oh, we talk about cash flow. Carlos, talk about interest only.
Yep. Yeah, that's one of the bullet points that I missed here when I was kind of reviewing it. So yeah, we can do interest only on this. We get a lot of that customers telling us, you know what, right now I want to just cash flow a little bit more. Maybe I'm going to take that money, reinvest it, do some other things with it. It does help, obviously. So we do have a 40-year IO, a 40-year loan term, in which the first 10 years, 120 payments is interest only. Okay. Now that's a fixed rate, so the rate doesn't go up. Okay, that's something also unique from us, that it's not a 10-year kind of interest only loan and then all of a sudden it becomes an ARM. It's not a 10-year ARM. It's a 40-year fixed loan. So you get 40 years to repay. The first 10 years is interest only. Then the following 30, it's P&I. That gives you a lot of flexibility for our investors, especially the ones that have multiple properties. Love that feature.
Yeah,
and if I could just
yeah, go ahead, Javi, please.
I was gonna say on the 40-year fixed, that it does recast. So I think that's a pretty awesome attribute that it has there. So if they pay down that interest during those 10 years, it does recast. That's a really cool point there.
Yeah, and I don't know if you covered this, Carlos, but we do qualify the borrower on that 30-year fixed payment, though. We don't qualify them off the interest only.
Yeah.
So hopefully, Fred, that answers your question there. A lot of great questions. We answered the prepayment penalty. Trying to look at a couple. Any options for a 5-unit, Stephen? Unfortunately, we are maxed at 4 units. So, Javi, touch on the cash out, actual cash in hand. And we know we talked about after 6 months using the appraised value, but how much cash in hand will we give the borrower? I know things are always changing. We've increased that. So maybe look at your matrix. So.
No, so for right now, we're at a max of 500,000 cash in hand. Now we have different seasoning requirements depending on LTV for cash out, but max they can get is going to be 500,000.
Yep. Yeah, Jenny's already jumped ahead to looking at the quick quote, so appreciate that, Jenny. We talked about prepayment penalty. I'm sorry, scrolling through a ton of questions coming in. Yeah, unfortunately, they have to own a primary. Occasionally, let's say they live in New York City, where renting, not owning a primary is common for the area. But again, get with your account executive. We calculated do multiple property cash out. Yeah. So Carlos touched on this. Carlos, maybe talk about this again about multiple cash outs. Can we do them all at the same time?
Yeah, it's a wonderful idea. I always like to, I think part of all these loans, and especially this loan in particular, John, and I think Javi will agree, is opening up your kind of like widening your net, And a lot of customers forget that, a lot of loan officers and us, we forget sometimes that a lot of customers have investment properties that are free and clear and paid off, or have small mortgages, or have privates. So I guarantee you that private, even under the best of terms, is almost at double digits, at least. Interest only double digit rate. So why don't we take that customer out of that private? Obviously, we're going to have a significant increase, decrease in rate and payment benefit there. But let's go ahead and take a look at multiple properties. Let's cash them all out. Let's get this customer ready to, again, going back to getting more referrals, getting more leads, differentiate yourself from the other loan officers out there in the street. That, we want to give you that tool to make the call to that realtor office with these, tools in your toolbox that a lot of the other loan officers are not showing, they're not providing, they're not offering to their loan officers, to their realtor partners. So if you're going to these realtors and say, I have currently a pipeline of 10, 15, 5, 20 qualified buyers who are ready to buy today with deals cash out that we already did, and they have money sitting, they're ready, they're queued up, they're pre-approved, they're more than pre-approved because we just closed a loan for them, and execute all that pretty much simultaneously. Man, it's such a great tool for you guys. And then what happens after that when you do these deals with these realtors? Guess who's going to probably get the call for that FHA conventional business? You are. So it's like
like we said, they're multi-packs, and if you let us know ahead of time that you have a multi-pack coming in, we'll get it with the same underwriter. So you're not getting 3 different conditional approvals from 3 different people. We'll allow you to work with that same underwriter. I know we're about almost 20 minutes to the top of the hour, and what we do have, a lot of people have asked about pricing. Before we get away from the Q&A section, and again, this is being recorded. If we didn't get to your questions, we will have your account executive reach out. But before we get away, Carlos, anything we might not have touched, or Javi, same thing, that you maybe recently just got a deal done, or anything? And if not, we can just move on to the quick quote tool. So just take a couple of seconds if there's something you're thinking about as your mind, as we've been going through, answering a lot of these questions. Javi, anything? Carlos, anything? No?
Yeah, no, if you want to go, I mean.
No, go ahead.
Jump together. So no, I was just going to say, really lean on your account executive. If you don't know who it is, reach out. We really want to get personal with you guys, know who you are and know your deals. When you develop that relationship with your AE, it's going to make working those deals all much easier. We really, I call myself the pre-underwriter. I'm your DU ahead of time. I'm going to review this file. I like to say I'm going to try to kill your file before the underwriter does, because if I can kill it, they can kill it. So that's one of the things I love about us at Angel Oak. We're here to help you guys.
Yeah, and Javi, that's a great point. If Javi or Carlos, are not 100% sure, we've got a help desk, and they're not producing a prequal to you without feeling 100% confident that this deal is going to close. And Carlos, that takes me to another question. How quickly can you turn a prequal on a DSCR program?
Same day,
Yeah.
Yeah, I always recommend, obviously I said in the beginning of the top of the hour, call us so we can understand the scenario, what we're writing up, because, I have a great manager that always says, your pre-qual, my pre-approval is your calling card, right, John? So so I always like to say, when we issue that pre-approval, guys, and I have friends of mine that work at other, non-QM lenders that have a different approach, but ours here, I think, is why we are who we are. And once we give you that pre-approval, guys, that's your commission check. That's your relationship to that realtor. That's your commitment to that borrower that you're going to deliver them, deliver that investment property that they're dreaming of, or their primary, or whatever, depending on the different program, right? So I think that's something that sets us apart. Like Javi said, we want to really take that loan apart, put it right back together. So when we issue that approval, it almost should have a, make check payable to commission. That's how sweet it is when we send
and you can see we have a great time. We all love working together, but we take this so seriously, right? So, and we understand, as Carlos mentioned and as Javi's mentioned, we respect that referral relationship you have. And, not only do we want you to get that referral, just for this DSCR program, but we want you to get it for that agency business, even though we don't do agency, but we want you to get that business. So, Carlos, let's, we're 20 minutes now to the top of the hour. Let's talk about our quick quote tool.
Yeah, awesome. So this is another Angel Oak feature, a non-QM quick quote. It's funny now, I started in Angel Oak right in 2014. Now pretty much everybody names a quick quote. It's kind of funny. So thank you to all the competitors. We should have used another name. But anyway, it's a feature that we have available to you guys 24/7 online, on your phone, obviously, however you can access the internet. You do not need any login credentials, okay? You can just go in there, and when you're on the phone with a realtor, the loan officer, with a buyer, you can give them an accurate rate quote. Okay, I want to kind of, bring that to head to say it's an accurate rate quote. You don't need to go ahead and take out your pencil and your calculator and start doing the add-ons and all that stuff and carry the one if it's a condo. None of that stuff. We don't make you do any of that stuff. It's all done for you. Tom Taylor, our guys in IT and internal have done an amazing job of I think putting in there 1,000 quadrillion scenarios and pricing them out accurately so that you can deliver that accurate pricing to your referral partner. So click on the home page. It's going to ask you what channel type. Most are going to be on the broker channel. You select broker channel. So go ahead, John, and if you want to go ahead and input a standard scenario.
Yep, I'll do that. Credit score, our average credit score for Angel Oak across the board is 740 or greater. Let's do a 75% loan to value, Carlos. Let's show. We asked for housing history, right? That's just what their mortgage history has been.
Right.
Go ahead, Carlos. Take me through the rest of it.
Drop down, John, so everybody can see from the property type, 1 unit, 2 to 4, or condo. So go ahead, take your pick there, whatever you want. 1 unit's fine. Purchase. Now, the income documentation, click on that. So as you all know, of course, we do have other income types, right? Full doc, self-employed, bank statements, 1099. This one is, of course, a DSCR, so it's the last option. There you go. Select that. So is this an owner-occupied? Nope. It's going to be an investment, of course. We're looking at U.S. citizen here, or by the way, permanent residents. Next week, I believe you guys are going to talk about the foreign nationals. So this program is only for U.S. citizens and permanent residents, okay? 30-day lock period. We do have other options for locking for pricing, but I always say just go with the basic 30-day lock, and just don't make any other modifications. You can see the true apples to apples comparison. So if you see there in front of you, I believe, let me see, there it is, 7.875. It's a 30-year fix. And here you can, there you go, John. Can you keep coming down a little bit more?
Oh, sorry. Yep.
Yep, it's all good. It's all good. Yep. So for those of you that have the questions on the prepays, it's right there in front of you. Okay. Like Javi said it, you can buy it out. You can increase the rate. You can do whatever you want to go ahead and give that customer a little more flexibility. Now, John, if you can come right back up. What about the customer says, hey, the rate, obviously the customers, if we show a 2% rate, it's too high, right? They want a 0% rate. So no matter what, those of us who've been in the business for a while, no matter what rate you get, it's always too high. But anyway, it is what it is. This is the market that we're in right now. What about if the customer wants to do a buy down? Do we allow buy downs? Yes, we can. So John, if we hit view rates, click on that. We do. There you go. Go to 100 as your par, of course. So anything under 100, that's your cost to buy down in case the customer is interested in doing that. Some are. Maybe we have a DTI issue on other deals, not this, it's a Dscr. Maybe they're looking for a specific payment that they want to hit to assure that cash flow. So that is available for them as well with the buy down.
So Carlos, yeah, this is great, and we've really, this is a rate, and again, it's all about the payment, how the property is going to cash flow, and we can do a no DSCR. The greatest way to accumulate wealth is always been through real estate, right? So, for the first time, the experience, you're not coming with tax returns and reserves on really. If you are meeting with an investor, and I say this when we talk about bank statements, if you're meeting with a self-employed borrower, if you are meeting with a investor, whether they're a first-time investor or a seasoned investor, get their tax returns, but also keep this as an option in the back of your mind when you're talking to that, investor. It's really everyone. I hear a lot of podcasts and stuff going on. It's time to really be that true advisor to these borrowers. So Carlos, we've got a lot of questions about, hey, how do I get a prequel to you? So let's pick on the par rate, Carlos, and let's take them through how to get that 1003 credit report to you.
So select that par rate, work your way down a little bit, and go to select option. There you go. Now work your way back up to the top of the page. You're kind of always landing at the bottom. So at this point, it's going to ask you for a Fannie Mae 3.4 MISMO file. Not necessary, okay? So let's go ahead and skip that. Go to next. And this is the important part. So you're going to go ahead and select your local account executive that you're working with, your name, your company, your NMLS ID, all your personal information, and not personal, but your work information. And you're able to drop the 1003 PDF and the credit report PDF there. That's all we need for a pre-qualification. 2 documents, PDF 1003, PDF credit report. Can you do this on a TBD address and a TBD purchase price? Yes, you can. Can we pre-qualify the customer today to get them ready to purchase tomorrow, next week, next year? We can. What about the customers working on their credit? Can we do something like that we can? Absolutely, guys. I would recommend that we get these pre-quals as soon as we can in case we need to talk to them about improving that's something you would do, right? But improving the credit score. How do we get them ready to purchase? If not today, in 3 to 4 months, and I always say, just because the customer is I don't want to say wealthy, but they have properties and stuff, they still need our help. It's not just that first-time FHA buyer that is, you got to do a little more hand-holding and helping open up an account. We see people who are doing well who are also, kind of a little bit, they need more guidance. Like Johnny said, we need to be more of that consultant. We're not, kind of writing just deals up with our eyes closed. We got to be real consultants here. We want to help you be consultants. And like Javi and our AEs, we know what it takes to close loans. So we want to help you with that. We want to help you, get that information to your customer. So yes, send us a deal that you want us to look at so you can look at rates, look at terms, even if it's a TBD. So upload those docs, and right at the bottom there you hit submit, and
that goes directly to the account executive. So I picked Carlos's name. If you pick your account executive's name from that drop down, that goes directly to the account executive. And as Carlos said, and Javi can attest to, is these are pretty, unless there's, something wrong with the credit or a second or third question, we can knock these out in same day. So, and again, speed of getting that borrower off the street is critical. So, so as Carlos mentioned, there's no login credentials to get to this quick quote or to submit a prequel. But Javi, you're going to talk about the really fun part, is how we're going to help everyone on this call and everyone who registered who maybe couldn't make it, that will get a recording of this. Javi's going to take us through how to market to these borrowers, or how to market yourself differently through the channels you market today. So go ahead, Javi.
And John, Javi, sorry to interrupt. I think this is the most important part of the presentation. Javi has the honor of doing that. And guys, pay attention. This is the best way. This is the most important part of what we said the last 47 minutes. You can throw all that away. How do we get these deals? How do we find these customers? Because remember, guys, because of the economy or the lockdowns or political reasons, Florida is the place everybody's coming to, right? We all know that, right? So how do we get these customers? And they're buying multiple properties. So, Javi, sorry to steal your thunder, but
go ahead, Javi.
Oh yeah, you set the tone. So yeah, I mean, if you're working with us and you're not using this portal, you better start. And if you're not working with us and you wanted a reason on why to work with us, how about a free marketing partner? I mean, this is my favorite part of our portal. I tell everyone that I do a webinar for, use this to advertise yourself. I mean, if you're not advertising yourself, how are people going to hear about you? So yeah, if you could just go ahead and log in there. When you all get your credentials, if you don't have, contact your AE and he'll get you some, or she will get you some. And then you're going to go over to, on top, you're going to see marketing portal. And as you see right there, if you could just leave it hovered, we have presentations, whiteboards, social media, and flyers. These are all awesome tools that you can use. If you could just open really quick the whiteboard and social media, John, just really quick.
Yeah.
So as you see here, whiteboard, guys, these are 1-minute videos for you to use on social media. If you're not active on social media, I highly recommend it. It's 2022, everybody's on it. Get your LinkedIn, get on Facebook, get on Instagram, use these videos. It's gonna break down the video down to the basics. We're not gonna be using all this LTV jargon and all these terms that we use in the mortgage industry. Borrowers that they're just going about their day, they're not gonna know about all this for the most part. We provide you videos here to just advertise it, and they're gonna see it and be like, that's me. We also have social media posts. Like I said, LinkedIn, Instagram, Facebook. We provide all these posts targeted towards realtors and borrowers for all of our programs. We have pictures for you. As you see, you have the square image for Instagram, the rectangular one for LinkedIn and Facebook. Again, this is all free for you when you guys work with us. So you guys use this as much as you want. Blast this out every week, every day if you want. We have a program for every day of the week. Honestly. And then, so the last thing, my favorite is the flyers. And if you can open that up, these flyers here, fully customizable flyers, guys. Every program, it's not just for programs. We have it for CPAs, targeted towards realtors, and obviously targeted at borrowers. As you see here, he opened up the investor cash flow one. You look at this beautiful site here, you see fully customizable. I mean, you could put your photo, as you see in the bottom right, you see a nice picture there of someone, one of the mortgage brokers. He's able to put his logo on top, all his information at the bottom. And of course, we even have a spot for your disclosures. As I always tell in my webinars, get with your compliance team and make sure you put the right disclosures on there. I don't want you guys getting in trouble. But the best thing about these flyers is they save to your credentials. So when your AE gets you your credentials, you'll be able to just log back in, get your flyers open. You'll be able to print it, download it. And as he has there, we have Spanish flyers for you as well. I know Carlos here in Miami, we have a bunch of Spanish speakers. He probably uses that a ton. But we have all of these. And if you click a different type of flyer, your information stays there. It's going to save with your credentials. And you'll be able to just open it up, print, log out, and then when you come back tomorrow, it'll still be there. And that's an awesome tool to use.
Yep. Yeah, and then, Javi, I don't know if you want to talk about the Realtor presentation.
Okay. Yeah. Yeah, so Realtor Presentations, as you see here, we have a flyer for that as well. We also have 2 presentations. We have a short one and a long presentation, depending on who you're marketing to, when you're marketing. And guys, one thing I always, again, I keep saying, I say it in my webinars, use your AE for these Realtor presentations. I personally am an inside sales rep, so I do it through Zoom. I've done Realtor presentations before. I speak to you guys. I market for you guys. I tell your realtors how they can use you to use me to get these deals in. For people like Carlos that are your outside reps, your personal local outside reps, they might go to your presentations with you. Most of the time they do. I've heard it from AEs all across the country with Angel Oak. We go to the presentations with you, and we'll present it for you. We'll talk to your realtors. We'll do a quick Q&A as well, like we did here today. But as you see here, a full presentation for realtors, it's free marketing, guys. Again, if you're not using this, you're missing out big time.
Yeah, and Javi's being nice. I get a little crotchety when we talk about this, because it's really, no one takes it. I feel like no one takes advantage of this. You know, the Realtor presentation is probably the most powerful presentation you can do. You know, having, and whether it's Javi, Carlos, or any of our account executives across the country, they go out there, they don't say anything about Angel Oak. They present on your behalf, and I'll use Salvador's name here. Salvador, they'll go out and they'll say, hey, we'll talk about bank statements and self-employed borrowers, or we'll talk about investors and this debt service coverage ratio. And when a realtor asks a question to Carlos or any of the AEs, they're going to say, that's why Salvador is your go-to person, right? They're not going to say anything about Angel Oak. We're just one of your investors. And it's just a powerful presentation. And, you know, I get a little discouraged because people don't take it up. And guess what, people? Refinances are down over 70%. The prediction was 63% this year. Everyone should be looking for new ways to generate business. So I'll get off my soapbox here for a minute. But so, Javi, anything in closing? And Javi, first time, great time. You did a great job. So thank you, Javi. Anything in closing, Javi, you want to share?
Yeah, actually, just about this marketing tool, just to feed off of you. Guys, I love using this example. If you have a bucket of Amazon gift cards nowadays, everybody loves Amazon, and you have 2 arms to grab those Amazon gift cards. Imagine if you had that many arms reaching into a basket to help you out. Use us, use your realtors. Every time you add another person to your network, they're going to be advertising for you. Those realtors are it's business for them, it's business for you. There's no sense on why you shouldn't be reaching out to all the realtors in your area, letting them know you have a program other brokers don't. Yeah.
And then you also have the AE that's going to support you and make you feel confident there. So Javi, again, great points. Yep. Carlos, anything else in closing?
Yeah, just I always ask that you lean on your account executive and you build that relationship with us. We are your #1 ally to help you close your deals. We truly take this, like you said, serious. You know, as a team, I think we always go to the trade shows and we see the competitors, and put it nicely. And there's a reason why we're the best, guys. And I hope you can see that. But I always say, we can say we're the best or the biggest or whatever. I produce this and then the other. But if we don't help you guys close loans, right, and look like a rock star in front of your realtors and your referral partners, we're not doing our job. And I think that's what makes us different, because we know the stress that you're going through, because you're getting the call from the realtor and the title company and the seller and this one, and threatening you better close tomorrow or else. And we understand that. We've all done that. We've all been in the business for a few years already. And we take that very seriously. Most of our AEs have been here for a long time. You know, I know a lot of AEs that jump around, you know, to lender every 6 to 8 months. So when you send them a deal because you think you have a better rate or whatever, they don't know the guidelines. You know, they're just writing something up because they just need the volume and they're throwing it up there. And that's just a recipe for disaster, guys. So I really encourage you to look into working with Angel Oak and your account executive if you haven't done so already. You know, and if it's been a while since you worked with us, maybe you had a bad experience. Some loans do go sideways. It happens. You know, I would definitely say, let's build that bridge again. Let's see how we can both work together, because sometimes, you know, you guys could do better things, so can we, and we ask for that cooperation. But definitely, I would definitely say, if you haven't looked at us for a while, look at us again, because I think you'd be very pleasantly surprised.
Yeah, Carlos, you bring up some great points there. Traditionally, this is, where agency starts to slow down, and it's kind of a double whammy now. Agency business usually slows down in the fourth quarter, and throw on top of that a rise in rate environment. But conversely, non-QM usually, usually Q4 is our number one quarter. So, let's keep that momentum going. So, Carlos, you brought up a couple of other things I do want to touch on. Reach out to your account executive. They will hold your hand through this entire process. Every one of our account executives is always backed up by not only a great account manager, but a great, underwriters, right? People are motivated to close your loans too. So for everyone on this call, this is going to be recorded. We will get this out. There's a lot of questions. There's a bunch we didn't get to, but we will get your account executive to reach out to you. So, so on behalf of everyone here at Angel Oak, I want to say thank you for taking the time out of your day. If you've closed a loan with Angel Oak, thank you for your business. We really appreciate it. If you haven't, there's 72% of you that have not closed a debt service coverage in the last 12 months. Let us take you through that process. And so
I will.
Yeah. So, and then, a little shout out to Oswald. I know this is her last webinar with us today. She's behind the scenes, does a great job. So thank you. On behalf of everyone at Angel, thank you very much. Appreciate your business. And again, let's close Q4 strong and let us help you grow your business. Have a great afternoon, everyone.